higher and higher inflation is lowering the standard of living. The latest report on consumer inflation helps to confirm what many American households have suspected for months, if not years now, that rapidly rising prices are forcing consumers to lower their standard of living to make ends meet. In other words, people's standards of living have got to start going down. People are going to have to start giving things up. Yes, some kind of ways. U.S. consumer prices shot up faster than expected in July, fueling the biggest year-over-year jump in approximately 17 years, according to the latest government data. Prices were at least 5.6% higher in July than they were a year earlier. And of course, energy prices were up at least 29.3% for the year so far, and food costs were at least 6% higher. Excluding volatile food and energy items, the so-called theoretical core CPI rose 0.3% in each of June and July, above forecasts for a 0.2% gain in July. On a year-over-year basis, supposedly, core prices rose 2.5% in July. Actually, it's probably higher than they're actually saying, because it usually is. A separate set of data showed just how hard those prices rising are hitting household budgets. After adjusting for inflation, the average weekly paycheck in America dropped by 0.8% in July from June in just 1 month, extending an ongoing slide in actual real income. So, that has left real earnings at least 3.1% lower in July than they were a year ago. Meanwhile, prices have been going up rapidly. How's that going to work? No, that's not adding up too good, is it? So, everybody's standard of living has got to start dropping. As the rising price of energy, food, and other raw materials cuts into businesses' profits, the companies that make, ship, and sell the things consumers buy are now beginning to pass those costs along. And, well, they're shrinking a lot of packaging too, and putting less in the packages, which is another way of passing those costs along. And with households already getting squeezed, something somewhere has to give. But paychecks aren't keeping up with price increases, and the tax rebates supposedly helped a little, but mostly they're largely spent now. So that means that as the higher costs of food and energy are passed along in higher prices for services and finished goods and ever-shrinking packaging, the consumers will just have to tighten their belts another notch after another notch. Anyway, there's no doubt that inflation numbers are squeezing standard of living, said an economist with RDQ Economics. And that's even more true abroad in the developed world, the poorer parts of the world, where food becomes a much higher part of people's consumption basket. They spend a lot more money on food. Well, a lot of people are starving in the world, that's for sure. And it is getting worse rapidly. Despite a recent drop of more than 20% from this summer's peak, oil prices are still roughly double last summer's levels. And grain prices have tumbled from record highs this summer, but again, they're still more than double 2006 levels. This is all unsustainable. This is not going to work too good. This is more than just, no, there's nothing normal about how the economy is working anymore. And as consumer budgets have gotten squeezed, so have corporate profits. Faced with higher shipping costs and higher plastic costs, consumer products companies like soft drink maker Dr. Pepper Snapple Group have raised prices, even as sales have fallen. That's not going to work too good either. The company said Wednesday that revenues rose just 1% in the latest quarter after higher prices offset a drop in sales volume. Well, you know the story. They can't keep doing that. That doesn't add up very good either, does it? There's some major problems here with the economy, isn't there? With the economy the way it is, a lot of our customers are now thinking with their wallets, said Larry Young, CEO of Dr. Pepper Snapple. Right now, we're just watching the market. If we see that we need to go up, we'll be able to act quickly and raise them. Or I guess they could cut what's in the can, huh? The amount in the can. Anyway, some companies that haven't yet passed along higher costs are having trouble holding the bottom line. Some 38% of small businesses surveyed by the National Federation of Independent Business said they plan to raise their prices in the next few coming months, according to the trade group's latest monthly survey. Well, there's ripples. It ripples out from there too. That means other things will be going up too, won't it? But it's not clear just how much of that inflation pass-through is still in the pipeline, so they say. Much of the uncertainty stems from the Federal Reserve's dual mandate to fight both inflation and recession at the same time. To fight inflation, the Fed typically raises interest rates to slow the economy and cool demand. But with the financial system battered by the bursting of the housing bubble and subprime mortgage crisis and the ensuing credit meltdown, the Fed has cut short-term rates to just 2%. By holding interest rates at less than half the inflation rate, the Fed is focused, theoretically, supposedly, on stabilizing the financial system. Of course, the Fed doesn't really understand what's going on either, do they? No, they don't really know what to do. Doesn't look like it. So, the hope is that the ongoing slowdown in the economy will eventually somehow take the pressure off demand for commodities like food and energy. Well, perhaps in a normal economy, but these are not normal times. There's nothing normal about these times at all. The housing market is still collapsing, and you have a huge excess inventory of housing, said one economist. So consumers are going to be under fire. Declining spending power is already beginning to show up in the results from the nation's retailers. Yes, this is where the standard of living in the U.S. or America starts getting cut, isn't it? America has some real problems. America is in trouble somehow. Yes, and these are more signs of the end times, transition days, and there are many signs.